It's very clear that there is one show in town. It's the Trump administration, what to do with Greenland, with tariffs and some of the threats that we've heard from them. Do you worry about the effect this has on the world economy, including your economy?
Certainly, because with trade, normally countries like Nigeria, emerging markets can expect to benefit from growing trade, which will lead to increased output. So in a situation where the world is fragmenting, where there's a move back from multilateralism and from world trade at the global level, a move back from globalization, we worry that that will lead to less trade, less growth, and of course, less opportunity for countries such as ours and less investment. And that, at the end of the day, leads to a society in which you have less growth.
I mean, do you worry about an imperialist America also when it comes to oil facilities and things like that? Or should we not worry about not be too alarmist and just try and stay the course?
We try to be positive and look at it that as a country that has resources, that has critical minerals, maybe we'll be asked to do a transaction that will be mutually beneficial. That's the way we look at it.
Minister, talk to me a little bit about your government borrowings plan for this year, considering the wider budget deficit projected for 2026.
Yes, on paper we have a wider budget deficit because we've got the approval of the National Assembly of Nigeria, the Parliament of Nigeria, but actually the commitment of President Bola Ahmed Tinubu under his renewed hope agenda at the stage we've got to now, after removing major distortions, after stabilizing the economy, is to consolidate and in fact to rely less on debt and to try and drive investment. We're here in Davos to tell the Nigerian story and to show how investable Nigeria is now that we have a stable macroeconomic environment.
Are you planning any further Eurobond issuance? Or other issuances?
We have the latitude to do it, but as you know, if you want to go to the market, first of all, the market has to be receptive. Yeah. You yourself have to be within your guidelines and your rules and regulations for borrowing, your margins for borrowing, and of course, the timing has to be right. So we'll see down the road what will happen in that area.
But could we expect something big on Eurobonds this year, or is the appetite not there?
We're hoping to rely less on borrowing, but we'll see what happens there. We have the latitude to come to the market. We were very well received the last time we went to the market, but honestly, our emphasis is on investment and particularly driving domestic investment, increasing domestic savings for investment in the Nigerian economy in order to grow it.
Minister, Nigeria's debt-to-revenue ratio remains amongst the world's highest, actually, the world's worst, despite recent reforms. So what is the government doing to correct that?
Well, that's the point. The issue is now to focus on revenue, focus on domestic resource mobilization. As you know, we have a tax reform regime that is coming into place, 4 tax acts that, apart from being pro-poor, are meant to help increase the tax to GDP ratio from quite a low 13% now to drive it up to about 18% in the nearest future. In addition, we have automation, application of technology to drive internal revenue of government, block leakages and loopholes which a manual system has engendered. And as I say, in addition, we are looking to bring in private sector funding. The private sector is 90% of the GDP, and we want, under the regime that we have now, under the improved incentives that we have now, that Nigerians consume less and save more and invest, as well as the diaspora Nigerians and indeed foreign investors. We're looking to places like the Middle East and other areas that are cash rich and looking for good investments.
Minister, how much time does that give you, actually? I don't know whether there's a threshold of debt where you think you might need assistance from the IMF.
Well, we're hoping that what we are putting in place is immediate. We are in major discussions with foreign direct investors. We have just signed a CEPA, a comprehensive economic partnership agreement with UAE, and we're hoping that this effort allows us to to bridge that gap and to bring things into balance fiscally, such that we can rely on our own resources more than the multilateral institutions, who, as you know, are always there. But we are in an environment where multilateralism as a whole is receding. So we're looking to rely on our own resources, including the regional market of ECOWAS and the continental market of the African Continental Free Trade Area.
And you're confident that this will happen?
We are optimistic and we are determined, and we'll give it our best shot. And as you say, we need to get better fiscal balance quickly, and that is our aim.
Minister, going back to the IMF, is there a threshold? Is there a number in your head in debt to revenue that actually you start being very nervous?
Not at the moment. Not at the moment. The idea is just to be making sure that we bring the figure down from where it is now.
Yeah. Is there anything that the IMF wanted you to do that you've resisted so far?
I think when we're in discussions with our trusted partners, the IMF, the World Bank, what they look at what President Bola Ahmed and Tinubu has managed to do in 2.5 years. Nobody would not reasonably put that down as a condition. So he has gone so far, he has done so much to correct the distortions of the past and to bring back investor confidence. If you look at the reserves, you look at the inflation rate, if you look at the stable exchange rate, you can see. And if you look at the growth in the first half of 2023, 2-point-something%. Now 4 in the first half of 2025. Sorry, 4.23%. So that is a trajectory which we look to maintain, and we know that would take us to the kind of growth that will lift millions of Nigerians out of poverty by creating jobs for them.
Okay. Minister, I want to ask you about under the new regime, what do you see the tax to GDP ratio being?
Well, the aim in the short term is to get it up to 18% of GDP, and of course to get government spending, the amount of money that government has available to put into social service and infrastructure, way over 20%.
What are you most looking forward to in Davos? I know, again, a lot of people are anxious. I don't know whether you meet with some of the Trump administration, there's a big delegation from the US, or whether you're focusing on other parts of the world.
I think that anxiety is created by uncertainty. There's less predictability about the world order. There's less predictability about the import regime that one will be faced with. And so that is natural. But we are here optimistically telling a story of credible macroeconomic reform, which we intend to maintain the course. And of course, we're here to talk to investors, to show them and to convince them that Nigeria is investable. We have a large domestic market. We have the resources, natural resources, and we have an improved investment environment. We have critical minerals. We are able to do a deal.
Yeah, have you approached the US about possibly doing a deal? Or are there any discussions going on that?
We are approaching the world, and you must also remember that in terms of value added, we now have 650,000 barrels a day that were normally being exported crude, raw, and that are now being refined into petroleum products as well as into other petrochemical products, so that we are back on that road to industrialization. That is what we have to offer.
Minister, it's very clear that last year the economy managed actually with the tariffs and trade uncertainty, largely because a lot of countries did not retaliate. Could 2026 be different?
Well, we are there to find out, and we are hopeful that there will be a pullback from fragmentation, and that there will be more predictability, more certainty, and more multilateralism.